Hey, everybody. Welcome back. It's so slow right now with the earnings season ending, and I thought I'd do a video here on what should you trade, right? And I thought there's no better example than to discuss, you know, what you should trade because, like, I get so many people, they come to me and they say, Steve, I want to trade the spider, right? I want to trade the QQQ. I want to trade the NASDAQ, etc., etc. And every time that happens, I roll my eyes in pain, right? Because people just don't get what they're doing. Like, they really just do not understand what it is they're doing, and they don't understand that trading really is a zero sum game at the end of the day. Number one, whenever you're trading, you're usually up against a professional. If you think about the fact that 85% of the volume that goes through in the market is some type of professional. It's a market maker. In many, many, many cases, you're trading against a market maker who's filling your order. And very rarely are you trading against, well, if you're trading big stocks, very rarely are you trading against um, another retail trader. Remember, somebody's always got to take the other side of your trade, right? For every buyer, there's a seller. So um, when people come to me and they say, Steve, I want to trade nothing but the SPX or the Spider, I always cringe and really get worried because you're trading some of the most heavily funded, smartest people in the world. Let me repeat that: the most heavily funded. I remember being, just quickly, I'll digress. I remember being a kid and playing poker, and I wasn't a kid. I was probably around, I don't know, around 19. But when I was 19, I was a millionaire, and I had a lot of money. And I can remember somebody teaching me how to play poker back when I was 19 years old, and uh, I remember I had like $10,000 and they had like 300. Well, I didn't even know how to play the game, and I took all their money because I could just outgun them because I had way more capital than they had, and ultimately my luck just came in. Their skill couldn't overcompensate for my luck. So I remember, they wanted to play me again and again and again. Finally, I took this person, we played 10 times. Every time I played with 10,000. Every time they played, we played 300, and I took $3,000 from them because they couldn't compete with me. And it's the same holds true when you're trading the markets, and when you're trading against big money that can push the markets around very rapidly and very quickly. You got to be very, very concerned with that, and especially when it's big, smart money, right? So, whenever anybody's trading one instrument, I always get very concerned because the chances of long-term success are very limited, right? Unless, of course, you happen to be on board with that smart money, and that's exactly what's happened in um, the last 15 years or 8 years, sorry, 9 years. We've had a bull market, so if you've been buying the dip, you've done very well. But it's not because of brains; it's just simply because you happen to be on board with the smart money. Right now, ultimately, markets always change, and this one will, like every other one does. But if you take a look here, I just want to pause the video for a second, and I want to show you the stocks that I've actually been trading this last couple of months. Okay, so I expanded the video out. Hopefully that will be okay. So these are all the stocks that I have traded in the last couple of months. Now, I've actually traded a lot more than these, but these are the ones that I still have positions open on. Most of these I traded around earnings, and these are actually my losing earnings trades because I'm in these positions with options trades that haven't expired yet. So, you take a look at a stock like AVA, right? Now, I actually, before earnings on this stock, I had a put position. I was on the wrong side of that, right? Stock has to get back down to 80. It's not a terrible situation because in this particular case, I actually sold a vertical on that, so no big deal, right? It's just an expire worthless, right? But I want you to look at that stock, right? Now just look at this stock. First of all, look at the earnings on it. 14 cents, 34, negative 16, negative 12, a dollar, 32, negative 24, 27, minus 51, minus 18. Now why am I pointing these out to you? Because a stock like this is going to be really, really hard for the market makers to value, right? They're going to have a hard time valuing it. And if I go down and I look at a 2-year 1 day, you can see it's been parabolic, but you can see it's jumpy. Like it jumps all over the place, right? Then it drops down hard, then it jumps up, then it drifts down hard, then it jumps up, then it drifts down, right? So um, when you have earnings on a stock like this, I can compete against a market maker because, um, you know, it's going to be hard for him to really value that. It's even going to be hard for professionals to value that. This stock happens to be a little bit more expensive, so I know there's a lot of institutions and smart money in this as well too. So it wasn't the best trade, but still worth a worthy trade. Here's another stock that I traded. Again, look at how jumpy this stock is. Like, who can value this, right? Nobody can really value this. I took a short on this one, right? And this one I actually got right. But what happened? I took a short after earnings, right? It's still got a ways to go. If it gets down below $7.83, I'll actually make money on that trade. It's got about 20 days left in it, if I'm not mistaken. Again, but look at the stocks I'm trading, right? CLDR, another one. See how jumpy these things are, right? Like when I'm fighting these professionals, I got a shot at beating them over a long term, right? Because they're going to know so much about this asset that I'm never going to know. They just have the research capabilities. They have the order book, the deep order book, and I'm not talking about level 2. They can see the deep, deep, deep order book. They can see institutional order flows. They can see, what do you call it, crosses across dark pools. So like, fighting these guys, I got a fighting shot against them. Now, occasionally, I will take trades that are more technically based, like against EEM, right? I got short EEM here. That trade's still working out. I actually took off some of it. It's about to expire. Actually, I did an options trade on it. It's about to expire worthless. Another one, Egan, right? Again, another stock that's really hard to value. I got this wrong again. I'm showing you the ones I have wrong because these are all expiring pretty much worthless. They were dead after earnings, but believe me when I tell you, the winners that I had, I don't hold them open; they're closed, and I've closed them for 3 times, 4 times what I paid for them. These are just my dogs that I'm holding on to. This one's GDX, right? Here's a situation where I bought one off the lows here, a nice spread trade. This looks a little overshot to me. I think things are going to get a little bit dicey going into the elections, and I think gold's going to shoot up as we go into those elections. So I will trade those types of assets, right? I mean, I do trade them. I trade the Canadian dollar primarily because my entire account's in Canadian dollars. I live in Canada, so I have to be wary of that. Here's another one I traded, YEXT, right? I think this one still got to get below 23.50. So these trades I know, although they're my open trades, I could go through and show you some of my my other winning trades. So if you want me to do that, I'll do that. Let's go personal here, and here's the winners that I had right during earnings. Zoom Z, big winner on that one after earnings. WYC, that one I actually broke even on. WTW, another big winner after earnings, right? This was a big triple, right? WSM, that one I can't remember what happened in that situation. I think I actually made money on that one, not a lot. WOW, there's another one that was a big winner. TDT, this one was huge. I got this one long after earnings, right? Tilly's. This one was another big winner that I took long into earnings. Snap was a huge winner for me. I took that short after into earnings. That was a big winner, right? So, my winners are usually 3, 4 to 1, 5 to 1 on my money, right? So don't get swayed just because my the ones I have open right now, they look like they're bad, but they're not. But the whole point that I'm trying to take away, trying to give you guys is that when I'm trading assets that the professionals are going to have a hard time valuing, right? I have a tremendous advantage, right? If I go and try to trade the big names, the trick is you gotta, it's kind of a sweet spot, right? Like, you don't want to trade something too big, but you also don't want to trade something too small because it just becomes a liquid, right? So what I try to look for is that sweet spot, like usually somewhere between something that is all over the board. You see, like Snap. Look at this. I mean, this thing's all over the board. 1 minute is 23, the next minute is 17. You know, it's they can't value it, right? See here, it's 15, 12. Here it's 13 after earnings. It's 20. Here it's 14 after earnings. It's 11. There's no way for them to value that, right? So I know the market makers and the professionals and the institutions are going to be having a hard time putting a value on this stock. And again, look at the earnings, minus 14, 17, minus $2.31, right? That's another way I like to look at it, right? I like to look at stock, even Tesla, which I'm in right now, and I'm short on Tesla. I got short today, had a big day on it. I think I made well over, here I'll show you guys, today on Tesla, just to show you guys, I'm not making this stuff up, right? I made over $3,000 on Tesla today. I made over almost $6,000 on VKTX, right? Right. Those are the stocks that I trade. Almost a $10,000 day for me, right? Even Tesla, it's hard to value, right? You see, it's all over the place, right? So I don't mind trading big names that the professionals are going to have a hard time with, because if I have to go up against the smartest and brightest minds that are trading the Spider and Apple and Microsoft, I can't beat those guys. Yeah, I might be able to beat them once or twice. Like Facebook, I had a really big win on. But over the long run, I'm not going to be able to beat those guys. Okay, so I think you guys got to really, I think so many people just get so lost and forget what trading is, right? There's a buyer and there's a seller. It's a zero-sum game. It's actually less than a zero-sum game, because by the time you take into consideration commissions and slippage, right, it's far less than a zero-sum game. So you need huge advantages. And I want to trade against those people that I have a shot against. I don't want to trade against the smartest people in the world, right? I want to stay completely away from, for the most part, unless there's an extreme situation like Tesla right now, which I think everybody's having a hard time valuing, because Elon Musk right now is acting like a maniac, right? I'm actually out of that trade. I knew it was going to have a problem at this level, but I have some puts, a few puts left over with a limit down here. It's just a very, this account that I'm showing you right here is a smaller account. It's not my main account. that I just showed you on Interactive Brokers. But I just like the charting software on Thinkorswim, so I have a small amount of money in Thinkorswim. Okay, so yeah, it's a long explanation. Don't trade big names. You have no chance over the long run. You have literally no chance over the long run. Okay? The only chance you have is by sticking to markets that the professionals have difficulty with. And you don't want to trade penny stocks because that's a whole other kettle of fish, right? Now you've got a those are a little bit more difficult because of their illiquidity. So you need a balance. You need stocks that are, I like to look for stocks that are between a million and 2 million shares a day, and I like to look for stocks when I see earnings. I want to see earnings that are all over the place, right? That's one of the reasons why I actually have this account at Thinkorswim, because I can easily see earnings that are jumping all over the place. And if earnings all over the place, who's going to value that properly, right? Nobody is going to value that properly. Okay? Hopefully you guys enjoyed that. Don't forget what you're doing, guys. Okay? Don't get lost in the technical analysis, the order flow, the price action. Remember, you are ultimately trading against somebody else. Make sure that you got a fighting chance against that person or company or group that you're trading against, okay? Make sure you got a fighting chance against them. Sticking to some one product like the spider or something like that, the only hope you have is if you happen to be in a full bull or full bear market and you happen to be going with the smart money, right? And in those are the cases that I like to trade the spider. Don't get me wrong, there will be times when I will fade it. I think I called this top over here, but it's very, I talk about it a lot, but I don't trade it that much, although I talk about it because it's, more widely known as, a gauge for the entire market. Okay, hopefully you guys enjoyed that. Thank you. Remember to leave a like, and bye for now.